What's up, everyone? Welcome back to Wall Street Pulse, where we break down the real moves on the street. No hype, no scripts, just pure market talk. I'm your host, Mike Carter, coming to you from downtown Manhattan, and today we're diving deep into what just happened this past week on Wall Street, and what you should be watching for as we head into the first full week of April. It's been a roller coaster again. Tech got smacked early in the week, energy made a comeback, and investors are finally starting to ask the right question: how sticky is this inflation, really? So buckle up, because we've got a lot to unpack. Let's rewind and talk about what went down on the street. Tech takes a breather. Early in the week, we saw the Nasdaq slip as traders rotated out of the mega-cap names. Apple and Nvidia both saw minor pullbacks after a massive rally in Q1. But let's be real, this isn't a meltdown. It's more like a pit stop. Energy, baby. Crude oil jumped back above $83 per barrel midweek, fueled by tightening supply outlooks and ongoing geopolitical jitters in the Middle East. Energy stocks rode that wave. ExxonMobil, Chevron, names that had been sleepy in Q1, suddenly looked alive again. S&P 500 hits resistance. The S&P flirted with 5,300 but got rejected, closing out the week slightly lower but still holding strong above 5,200. For context, that's still up over 9% year-to-date. So if anyone's crying bear market right now, they're just not paying attention. Powell's patience game. Now here's where things got interesting. Fed Chair Jerome Powell spoke midweek and made it clear, they're not in a rush to cut rates. Inflation isn't where they want it yet, especially with that sticky services inflation. That sent the bond yields ticking higher, and you guessed it, that cooled off growth stocks again. Key themes going into April 1st to April 4th. So what's coming up this week? Let me walk you through the themes, levels, and sectors I'm watching closely. Short week, high stakes, markets are closed Friday for Good Friday, but we'll still get the March jobs report that day. Expect some after-hours volatility when futures react to that print. Jobs data is critical now, because strong labor equals sticky inflation. Translation: no rate cuts anytime soon. ISM Manufacturing, Monday. Watch for the ISM print on Monday morning. If we see strength in manufacturing and prices paid creep higher, that could spook the bond market again and push yields up, dragging tech with it. Bank earnings kick off soon. We're only 2 weeks away from the start of Q1 earnings season. But already, the big money is positioning. JP Morgan, Bank of America, and Citi are quietly inching higher. That's a sign that institutions are expecting a strong read-through from financials. Fed rate cut odds fading. Right now, the futures market is pricing in only 1 or 2 cuts for 2024, down from the 5 cuts that traders were dreaming about back in January. This repricing has been slow but steady, and that's why we've seen defensive sectors like utilities and consumer staples perk up lately. Key levels to watch: S&P 500. Watch 5,180 as near-term support. Break that, and we might test 5,100. Nasdaq 100 needs to hold 17,900 or we could see a deeper correction towards 17,600. 10-year yield: if it pops above 4.35%, expect more pressure on growth. Sector breakdown: who's got momentum? Let's break it down sector by sector. Here's what's catching my eye. Energy. Still hot. As long as oil stays above $80, the big oil names have room to run. Also watch for small-cap oil and gas to get attention, names like Devon Energy and Marathon. Industrials, names like Caterpillar, Deere, and GE have been quietly leading. Infrastructure spending, clean energy mandates, and global demand are the tailwinds here. Tech, cooling but not cracking. This could be a setup for another run, especially if bond yields stabilize. Watch for semiconductors to rebound first, think AMD and Broadcom. Utilities and staples, they're acting like safe havens again. Dividend seekers are rotating in, which tells me risk appetite is softening, at least for now. Final word, how I'm positioning next week. If you're a swing trader, this is a week for discipline, not hero plays. With the holiday-shortened week and the March jobs report hitting while markets are closed, I expect choppy action early in the week, followed by a volatile Thursday close. I'm staying light on tech until bond yields calm down, riding energy while the momentum lasts, and keeping an eye on industrials for breakouts. And remember, April has a strong historical tailwind, but it doesn't start firing until the second week. So next week might feel like we're just setting the stage. Alright folks, that wraps up our breakdown for the week ahead. If you found this episode helpful, drop a rating, leave a review, and hit that follow button, wherever you're tuning in. And don't forget, we post a full pre-market breakdown every Monday morning on our YouTube channel. If you're not already subscribed, get on it. Real talk, real data, no nonsense. I'm Mike Carter, and you've been listening to Wall Street Pulse. Trade smart, stay sharp, and I'll catch you next week.